Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about the biggest company in the stock market, and that is Apple. And we can see that this stock is outperforming the rest of the market over the last year, up around or down around 2%. The rest of the market is down 10%, and they are outperforming the market over the 5-year chart too, up around 260%. Rest of the market is up a little under 50%. So in this video, I'm just going to figure out if Apple is currently trading below intrinsic value per share, if they're currently trading at a good buying price. And then I'm also going to look at their financial statements and some of the recent news that's come out surrounding Apple. And so we can see right here in this article, they point out some of the tech earnings that came out for a lot of these big tech companies, including Apple. And we can see right here, they point out a couple of key bullet points here. First off, the earnings season was pretty mixed for the tech sector. Mark Zuckerberg called 2023 the year of efficiency, but cost cutting and layoffs was a story of the moment for a lot of these big tech companies. Also, there was a strong US dollar, and as a result, a lot of international revenue ended up being converted into fewer US dollars. And so if there's a strong US dollar, then obviously once you factor in the foreign exchange of converting foreign currency into US dollars, it's going to eat into the top line of a lot of these companies on their income statements. And then lastly, right here, we can see that the outlook for a lot of these big tech companies doesn't really look that much different in the short term, mainly because of the uncertainty surrounding the global economic environment. And if I scroll down a little bit here, we'll be able to see how exactly that affected Apple in particular. Right here, they point out that Apple saw a drop in demand for their hardware for Mac, iPhone, and their Apple Watches across pretty much all of their products. And they were also hit pretty badly by the strong US dollar. When they converted their international revenues back into US dollars, ended up putting 8% dent on their revenue numbers. So obviously, like I just mentioned, the difference in foreign exchange between international currencies and the US dollar ended up having a negative impact on their top line revenues. On top of that, iPhone sales were down 8%, Mac sales were down 29%, and some of their other products were down around 8.3% in sales. And they also bought back around $19 billion worth of common stock. Coupled with that, they also faced some production issues in China. So there are, a lot of bad stuff happening for Apple, as I obviously announced during their earnings. And then right here, they point out in terms of outlook, the arrival of a recession in the economy will obviously tighten pockets. A lot of consumers won't want to spend a lot of money on Apple's luxury goods, and that's going to soften demand for their products. And as a result, they're not going to be able to sell as many phones and computers. And so that might end up having a negative impact on their revenues and their earnings for 2023. Right here, we can see their income statement comparing December 25th, 2021 to December 31st, 2022. These are the results for the first quarter of fiscal year 2023. And so we can see right here, total sales were down from $123 billion to $117 billion. So that's a decrease of 5% year over year. And then we can see that in terms of net income, that's down from $34.6 billion to $29.9 billion. So a little less than $30 billion. Then if I scroll down here to their balance sheet, comparing the end of fiscal year 2022 to the first quarter of 2023, we can see total assets are down from $352 billion to $346 billion. They have around $290 billion worth of total liabilities and around $56 billion of shareholders' equity, with a $3 billion retained earnings line item, as opposed to a negative accumulated deficit that they had at the end of fiscal year 2022. And lastly, right here, we can see their cash flow statement comparing December 2021 to December 2022 for the 3 months ended in those periods. And we can see that operating cash flow was $34 billion, down from $46 billion. And they did repurchase $19 billion worth of common stock in the first quarter of fiscal year 2023. And they paid out around $3.7 billion worth of dividends. So pretty straight line here. They increased their dividend payout very slightly, and they reduced their repurchase of common stock very slightly. But all in all, pretty much identical year over year here in terms of returning value back to shareholders. So right here, this is a discounted cash flow model to figure out the intrinsic value per share for Apple. Yahoo Finance is estimating, as of making this video, they're estimating that Apple is going to grow at around 8% for the next 5 years. They had around $111 billion worth of free cash flow, a lot of free cash flow on their cash flow statement for their most recent full year. They have around $59 billion worth of debt on their balance sheet after subtracting their cash, and around 15 billion shares outstanding. That puts their intrinsic value per share at $97 per share, which means that at the current share price, they are not currently trading below intrinsic value per share based on the current estimated growth rates. Right here, I compared them to two of their main competitors, Meta and Google. Across the board, we can see Meta has the highest, Meta has the highest gross profit margin. Google comes in second place. Apple has the lowest gross profit margin, but they do have the highest net profit margin and return on assets. They also have the highest price to earnings ratio, and they're the only company here that pays a dividend. So in terms of comparing them to their other competitors, these big tech companies, from a financial analysis perspective, it looks like Apple is doing pretty good. They have the best earnings ratios. They are obviously priced the highest in comparison, but that could mean that investors are pricing in more growth for Apple compared to Meta and Google. So we'll see how that plays out in the long term. And then to end the video off, I wanted to compare Apple to some of the companies we've seen in the prior videos. Right here, we're comparing them, their current trading price to the intrinsic value per share that they were estimated for. And Apple right now is trading at 163% of their intrinsic value per share. So 1.63 times their $97 estimated intrinsic value. That puts them on the board in terms of the top 10, but they're obviously not doing as good as General Electric and Albertsons. Those are still the only two companies that we have that are trading below intrinsic value. In terms of growth rate, Apple had an 8% growth rate, so they did make it on the board, but they are dead last. GE has the highest at 44%. In terms of profitability, Apple is not doing that good in terms of gross profitability at 43%. Adobe still holds that number one spot at 89%. In terms of net profitability, Apple is doing very well. They're top 5 right here, coming in 4th place with a 25% profit margin. Microsoft still has a number one spot at 36%. And lastly, they did really well on the stock performance over the last 5 years chart. They had a return of around 260% basically over the last 5 years. That puts them in 3rd place, right behind AMD's 604% and Tesla's 733%. And then Microsoft returned 191%. Albertsons came in last place with 36% over the last 5 years. So in terms of comparing them to the other companies we've looked at, they're actually doing pretty good, especially in terms of stock performance and profitability ratios. But in terms of projected growth rates and their current trading price relative to their estimated intrinsic value, they're not doing as good as some of the other companies that we've looked at. In terms of comparing them to the other big tech companies, it looks like they're doing pretty good compared to Meta and Google. They're actually doing really well. They have better profit margins, and they're the only company that pays a dividend, so that's very good. And then lastly, right here, we can see based on this discounted cash flow model, they're currently not trading below intrinsic value per share. So I'm not 100% sure what to make of Apple at the current share price. Let me know in the comment section down below what you guys think. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.